going on, everyone? Back again with another SPAC video. This one's going to be a big EV renewable energy play right here. So we're going to be talking about Switchback Energy. This is a special purpose acquisition company that was formed to merge with ChargePoint, which creates a network for EV owners to charge up their cars. SBE stock has quickly climbed when rumors about the merger was announced, but then fell when the actual news of the merger being complete by shareholders on February 25th was announced. This truly became a buy on the rumor, sell on the news, as many of these SPAC plays are. One choice that's super obvious though, and always a good move, is hitting that like button for the algorithm and subscribing to the channel. So ChargePoint has actually been around since 2007, and they are currently one of the world's largest EV charging networks. They have a cloud subscription platform with software that's going to allow one to be able to charge at home, at the workplace, retail, among many of the other places. Guys, think about all the places you drive your car to. Those places can now have an EV charge option. ChargePoint today has over 100,000 places to charge in North America and Europe. Currently, every 2 seconds, somebody charges into the ChargePoint network. In the time that you've been watching this video, ChargePoint has already been making money. By now, we already know, we're not guessing anymore, that the future is electric. So a lot of this infrastructure needs to be changed for that to be possible. And ChargePoint actually estimates by 2030, the amount of infrastructure spent will be $60 billion. And by 2040, this number will grow to $192 billion toward EV charging infrastructure. 1/3 of all cars sold in 2030 will be electric. But me personally, I think that number is actually going to be much higher than that. ChargePoint again already has a pretty considerable market share in level 2 charging. They have a diverse customer base, and they've actually been in this business for over a decade. It certainly helps that they have over 100,000 places to charge in both North America and Europe. And these charging stations accommodate all types of vehicles. This includes passenger vehicles to delivery vans to buses. ChargePoint believes they have the winning business model because of the inevitable growth that will happen in the EV space means more revenue for them. They can charge not only for their hardware at high margins, but they also get recurring revenue with software subscription services. This is very similar to what Microsoft does with their Microsoft Office applications, where you pay for it month to month. There's nothing better than customers paying you every month. Enterprise value back in December of 2020 was an estimated $2.4 billion. Currently, when I'm looking at SBE's market cap, it was only $1.2 billion. Now, enterprise value takes into account market cap, but it also takes into account debt obligations as well. This particular slide gives a much more detailed analysis of what actually went into that calculation and how their pro forma capitalization is quantified. They're going to be using the money from this merger to keep pushing their EV charging positions in their existing markets, as well as fund their European growth. Something important to note about ChargePoint's business model though is that they only sell the charging software, stations, and services. They don't actually make money from the energy harvesting or driver utilization. Think of it kind of like if ChargePoint sets up a gas station, they would provide all the tools necessary to fuel a car, but not the actual gasoline. Again, as long as charging stations just continue to pop up and exist month after month, that's going to be reoccurring revenue for ChargePoint as long as their software continues to meet the world's demands. ChargePoint makes money from installations as well as the annual subscriptions from its software. Company revenue grew 60% year over year in 2019, and it's projected to have a compound annual growth rate of 60% from 2021 to 2026. Those are some lofty expectations, but I think ChargePoint can hit those marks if we do in fact keep up this fast-paced switch to EV. We can see that ChargePoint is already a platform partner with many different industries, and it doesn't matter if it's Tesla or GM that wins the EV market share, because ChargePoint is universally compatible. That is, until Apple finds a way to mess this up somehow. Probably makes you use one of their exclusive chargers or USB cables. ChargePoint already has its own app that can be used to find charging stations, as well as detect the level of traffic and cost there. A little bit about the actual hardware: they do require a payment upfront, but the actual product should last a long time, and the software business model is able to continue generating income. Also, the way that I'm looking at this is that, let's say I'm a business owner, and if I install one of these outside for the convenience of my customers, if I've already paid that installation and hardware cost upfront, I'm probably very unlikely to go through the hassle of switching charging station companies. Unless it's the product itself that actually went bad, it seems like switching would be quite the inconvenience. Even though ChargePoint makes the hardware, these stations can really show up anywhere with their own branding options. You could be at a 7-Eleven and the station itself will be covered in 7-Eleven logos. You can see that their leadership team has worked at some of the most innovative companies and they're bringing that experience with them to ChargePoint. So they've worked at Apple, Microsoft, Neo, HP, Yahoo, Uber. Looking at their revenue diversity, I personally would like to see their subscription services be their largest revenue segment. If they could maybe follow Roku's business model where the actual hardware that they provide is sold at a much smaller margin, but they know that the monthly subscription fees, that will eventually be the big money pay and pay off. Looking at their long-term financial projections, we can see their gross margin revenues are aiming to be around 40%. That means 40 cents of every dollar revenue is kept after selling costs are accounted for. That's a pretty good margin. Currently in 2021, they're only estimated to bring in around $135 million in revenue with 24% gross margins. And as of today, they're still not cash flow positive, but that's not too surprising given the SPAC nature of this. But if we look over here to 2026, we can see that now they're expecting revenues to be $2 billion and have gross margins of 42%. They're also expecting to have positive EBITDA. Again, this is assuming that they get this ridiculous year-over-year growth of around 60% every single year. That's basically doubling the company every 2 years, and that's not an easy task to do. I also personally don't think that the moats that they provided, moats are basically the barriers of entry for other competitors, I don't think they're actually that strong. This is still the early phase of EV charging infrastructure setup, and I imagine customers will look at a wide range of competitors, including Blink Charging, which is also aggressively trying to grow its network. So if one were to invest in this company today, they would have to be okay with potentially years of no positive earnings and volatility if lofty expectations aren't met. At the same time, if they are able to meet their targets, because after all, this is the ESG friendly company that everyone wants to promote these days, it could potentially pay off big. SBE is down 15% in the past week since the merger was actually approved, possibly now at an attractive point. This company will officially be renamed ChargePoint Holdings, ticker symbol CHPT, starting March 1st. Now I do want to hear from you in the comments below. Is this a good SPAC play, or are there better ones out there? How realistic are these targets that they're proposing? If you've enjoyed this video, please consider hitting that like button to help out the channel and subscribe for more awesome content. This is not financial advice, and I will buy, stash, collect cash you later.